I want to pay more taxes, said nobody ever, right? I mean, who actually wants to pay more taxes? It was very recently that our government announced that we had a $62 billion deficit in Canada, and that number just keeps on growing. And what happens? Well, government either has to decrease the amount of services that they provide, or they have to increase our taxes. So my question is, are you talking with a financial advisor that is clear and articulate in terms of tax planning and showing you ways to keep more of your hard-earned dollars in your pocket? So that's what I help people to do. And today I'd like to talk to you about something called probate fees. So this is a fee that many Canadians do not even realize they have to pay. So I am a licensed financial advisor in Ontario and Alberta. So today I'm going to be specifically talking about what happens in the province of Ontario. So what happens when anybody passes away? The government wants to know, what did you have? So what was the value of your house? What was the value of money in your bank accounts? Any investments you have, so stocks, bonds, T-bills, GICs, all of those investments, jewelry, artwork, vehicles. The government wants an accounting of everything that you've owned. Now, if you're married, so in my case, I'm married, and let's say my husband passed away, most of our assets are held jointly, so there wouldn't really be a whole lot that we'd have to worry about in terms of probate. But if I passed away, then the government's going to say, okay, Alynn, what was the value of your home? What did you have in bank accounts, investments, etc.? And then in Ontario, you have to pay something called an estate administration tax, EAT, EAT. Truly, I think they could have come up with a better word for that, but as you know, the government keeps eating up more of our money. And this is under the Minister of Finance. So paying taxes to the CRA on your final income tax return, that's one animal. This is a whole other animal. So the Ontario government wants to know within 90 days of somebody passing away what the total value of their estate was, and then they charge you $15 per thousand. So a few years ago, anybody, whether you had $10,000 or $10 million, you're paying an estate administration tax. They've simplified things a little bit. So if your estate is worth $50,000 or less, then you're exempt from paying those probate fees. But anything from $50,000 or above, the government charges $15 per thousand. So if your estate's worth $1 million, it's going to be, you don't have to pay on the first $50,000, so you save $250, but you're going to pay $15 per thousand on $950,000. So it works out to be $14,750 in probate fees. Again, CRA, paying a final income tax return, that is a totally different animal. But I have some good news. There are some ways that you can reduce that. Not all of them are necessarily recommended, so everyone's situation is unique. So I highly, highly recommend you speak to a financial advisor about your own specific case. In some cases, you may need to speak to a lawyer. So this is just very general information. I've had conversations with clients where they've asked, do I put my kids' names on my house? Sometimes it makes sense to do that, but keep in mind, if your child's name goes onto your house and they own a house, your house is not their primary residence. So although this is a way to avoid paying probate fees, they may create a tax problem for themselves. So everyone's situation is different. In this respect, you may not want to put your kids' names on the house. The other thing to be mindful of is, let's say you put your kids' names on the house and your child becomes divorced, then you're at risk of having to pay out some money to that spouse because they technically own a portion of your home. If your child goes through a bankruptcy, that could affect the value of your home as well too. So again, there are some pros and cons. So speaking to a financial advisor, and in this case a lawyer, about your specific situation would be ideal. I also get asked a number of times, can I put my kids' names on my bank account? Absolutely, you can. However, my caution to you is, if you put a kid's name on your bank account, they have all of the same authorities that you do. So, if I have a bank account with $100,000 in it and I put my grown child's name on it, then they can actually walk into the bank and they could clear me out if they wanted to. And I'm sure most people watching this are not worried about that, and their children aren't going to do that. I could do a whole video on stories of people that their kids have done that, unfortunately. So again, you can put your kids' names on your bank account, but I think the key is to be really cautious and just know your child enough and just really determine if that's a good fit or not. The other thing that you can do is on investment accounts, you can name what's called a successor annuitant. So a lot of banks, you can do that through your tax-free savings account. You may name a successor annuitant, which is typically only your spouse. So in that scenario where I said, okay, if my husband passed away first, unfortunately that successor annuitant would not cover me to keep money outside of probate. However, if you are working with somebody that is a licensed life insurance advisor, then they can set you up with something called a segregated fund. So segregated means to be kept separate. So with the segregated fund, the only difference is that your money is held with a life insurance company versus an investment company. So what happens when somebody passes away is that money does not become a probatable asset. So whether it's an RSP, a RIF, tax-free savings, non-registered account, that money stays outside of probate. Now keep in mind, if it's an RSP, RIF, LIRA, that money is taxable and you have to pay tax on your final tax return if you are not eligible for a spousal rollover. But having that money in a segregated fund is a way to keep from having to pay those probate fees. And in some instances, if you have money in a GIC, simply by having the money in a GIC with a bank or a credit union, switching those funds to a life insurance company where you put your money in a guaranteed investment account, again, that can keep your money outside of probate. So those are just a couple of ways that you can keep a bit more money in your family's pocket versus the government's pocket by keeping money outside of probate. If you found this video helpful, please like it and then subscribe to our channel. We're just starting a series of retirement and estate planning segments, so you can hear from us more. My name is Alynn Godfroy. I am the financial architect for Canadians, and I help you to retire on purpose.